The U.S. Central Bank left interest rates unchanged today in the Fed's first meeting since President Trump returned to the White House. Now, soon after this decision, Trump slammed the Fed chair, accusing him of failing to stop inflation. Worry and confusion for U.S. federal workers who feel they are being forced to quit their jobs en masse. The Trump administration has offered nearly all of its 3 million federal employees an option: return to work 5 days a week in the office or resign by February 6th. For those who leave, a redundancy package provides 8 months of pay. Now, one group advocating on behalf of civil servants says that the move puts Americans at risk since its workforce ensures public health, assists with natural disasters, keeps air travel safe, and maintains the rule of law. The White House estimates 5 to 10% of people taking the offer, saving the government $100 million. Trump officials say those who stay could still be let go in future downsizing. Okay, now for more on the state of the U.S. economy and the Fed rate decision, we are joined by Edward Yardeni. He is the president of Yardeni Research. Edward, welcome to the program. Thanks for taking time.
Thank you.
I guess no surprise all the way around. Firstly, the Fed leaving rates unchanged, and secondly, Trump's somewhat predictable fit at the decision. Let's begin by talking about the economy, where the U.S. economy is, and it was basically universally accepted that rates wouldn't be changed.
Correct, because the U.S. economy is doing very well. Consumers are spending. We've got baby boomers that are retiring. They're sitting on large nest eggs and they're spending the money. And the labor market remains really very solid. We're continuing to increase employment. So all in all, the economy looks fine, led by the consumer. We're also seeing some improvement in productivity because of the technology boom. So you put it all together and the economy is doing fine. Inflation is moderated a lot. It's not quite at 2%, but you put it all together and the Fed really doesn't need to lower interest rates. Pause makes sense, and pausing for a while makes sense until they get a better sense of what's next for the economy.
Okay, let's talk about the second part of that question. Donald Trump, in his inaugural address, he said he would demand the Fed bring down rates quickly. So can we expect moving forward an antagonistic relationship between the FOMC and Trump? And your reaction to what the president had to say after the Fed meeting today?
Well, I think the president clearly needs interest rates to come down because that would help to tame the deficit problem that he has. Right now, we have so much debt that at this level of interest rates, we are seeing that the outlays of the government just on net interest alone on a 12-month basis is running at $1 trillion. So it's a huge amount of money. But that's what you have. That's what happens when you go into debt. You have to make the interest payments. You have to service the debt, and that's something that the government has to deal with. But I don't think that just because Trump wants rates to go down, they're going to go down. Even the Fed wanted rates to go down. They lowered rates by 100 basis points in September, and the bond yield went the exact opposite way. The bond yield went up 100 basis points.
Okay, so overall, how would you grade the Fed's work over the past 4 years? Is it, as you mentioned, continues to try to wrangle inflation, and consumer confidence clearly has not bounced back. And critics did say that the Fed acted too late. Did they?
Well, I think the Fed on balance did all right. I mean, the reality is a lot of people thought that over the past 3 years, especially when the Fed started raising rates in 2022 through August of last year, that that would cause a recession. It didn't. And I think the Fed was actually pretty good at tightening without causing a recession, and inflation has come down. So at the end of the day, you got to grade them on the results, and the results are they've achieved their dual mandate of having the unemployment rate very low, it's around 4%, and having brought down inflation close to 2%. But, you know, it's not all the Fed's achievements. There's so many variables involved here that have brought inflation down, and they're keeping the economy going well.
So where do you think rates are going to go throughout the rest of this year?
At this point, I think none and done. I was against the Fed lowering rates by 100 basis points back in August. I anticipated that the Fed might start lowering rates, and I thought that wasn't really necessary given the strength of the economy. And now, of course, and at that point, there was a lot of unknowns of what fiscal policy would do. And now that Trump is elected, we still have a lot of unknowns, but I think we have some potentially inflationary fiscal policies with tariffs, for example.
You know, it's important to point out that Jerome Powell is slated to remain to be Fed chief until spring of 2026, and he has said that he's not going to step aside and he can't be fired by Trump. But less unclear, could Trump replace other Fed officials and appoint members much more willing, for lack of a better term, to do his bidding?
Sure. I mean, as positions open up, and they do open up, then he certainly could have more voters on there that are sympathetic to his views. But there does seem to be a consensus machine that somehow gets all of these Fed officials on the same page. You rarely get more than one dissenter, and so I think if Trump put a couple of his own people, you'd still have a Fed that's basically run by a consensus, that's basically run by Jerome Powell.
Okay. You know, we have about a minute left. I'm curious what has got your concern, or what you would say is looming on the horizon with this new administration and fiscal policy moving forward the next half year to a year.
Well, I think nothing really original. I think everybody's knows that there's going to be a lot of moving parts here in Trump 2.0, between deportations, between tax cuts and deregulation, and all of that is yet to be seen what impact it's going to have on the deficit. I guess my biggest concern is that the bond yield, which has gone up quite a bit, resumes its climb because the Trump administration loses its credibility with the bond market.
It's going to be interesting.
Yep.
Buckle up, I guess. Edward
Absolutely.
Yardeni, thank you so much for your insight. We certainly appreciate your time.
Thank you.